Share, by the way. I can track down the link for reposting to X, but I think we are live. All right, welcome to the Wolf Stream, everybody. Happy Tuesday. We got Mr. Josh Bratcher in the house. If you guys have been in a lot of our spaces, he comes through on the Market Talk spaces oftentimes, and on Wolf Financial comes through in a lot of those trading spaces as well. But he's been trading pretty much every single asset you could probably think of and doing a very good job at it for a very long time. He's now a father. He's leveling up in the game. And I was like, before he blasts off to the moon, I got to get him back on our stream and learn some stuff, talk about the charts a little bit. So we've done this show a few times now, just get on a bunch of traders and vibe, talk about how they trade. So Josh, welcome to the show, man. Welcome. Noble Trading as well, the Noble Trading community.
Absolutely. Thanks, Kate. Thanks for the kind words as well.
Sure. Of course.
Very kind. Yeah. So I guess, before I get a chart up, I kind of want to explain my philosophy for like the intro to trading.
Yeah, please.
And I guess I'll start from like a broad perspective of that. My philosophy is, first of all, I'm someone who trades quality over quantity. So I'm maybe taking like 4 to 5 trades typically on a day. Today actually is just a horrible price action. So I've made 1 futures trade today. I have not touched any options yet. And I also do intraday and swing trades, so I'm not afraid to take a put on a position that lasts for like 2 years or a position that lasts for, 5 minutes. But a lot of people kind of like use the theory of large numbers, and they'll take lots of positions and they'll have all these signals. And I prefer to solidify to what I think I have like strong edge and high probabilities of win rates. So I'm going to end 2024 with over an 82% win rate.
Nice.
And that is
82% win rate.
Yeah, and that's over the course of over 1,000 trades. So I believe in efficient market hypothesis. And for those unaware of what that is, I believe that markets are very efficient at pricing in all information. And that very rarely do they become completely deranged, let's say, or there are events like bubbles, but even then, I think that's the market pricing in some sort of abnormal effect. So when you believe a theory like that, you're not really fighting the price action of the market. You don't want to really fight what the market thinks is happening. What I want to do is I want to look for opportunities where the market is in the active process of pricing in new information. Okay, so something new happens, and efficient market hypothesis is playing out in real time. So I'll look for upcoming catalysts, or if a new news report comes out and I think it's significant, I'll be looking for different things. Like I want to see the relative volume, which is the volume as comparative to the last 14 days, to see if we see an increase and the average volume being traded, or I like to watch I should say, and I also really like to watch what is called the ATR, which is the average true range. So any asset, whether you're talking about crypto, whether you're talking about bonds, whether you're talking about commodities or stocks, has average true range, same concept. We're past 14 days. You can see what dollar amount this typically trades in. So when something breaks outside of its average true range and it has high relative volume, it's usually the market trying to price in new information, act out the efficient market hypothesis. And it's in those moments where I think I find the best edge and I play into that. Now, the simplified version of what that's called is just a momentum trader. I look for what's moving and I play what's moving. I look for things like key levels on the market. And so like we could actually, I probably should have prepped better on like what chart I'd really like to pull up. We could pull up Netflix, I think,
There we
or
go.
AVGO. Maybe we want to do AVGO here and take a look at this one. And then, how do I share my screen on this?
So go to present.
Oh,
In the
okay.
middle. Yeah, you see it, present, and then share screen. There you go.
Yeah,
and by the way,
such...
for anyone who's you're good. For anyone who's listening, by the way, if you haven't already, please retweet the stream and give Josh a follow. He's up there in the title. You can just click his account. But the goal of these streams is pretty much to get on people who are making money from their computers and phones in a very, very real way, not like $50 a week, but income generating, an actual job level of income, or they've just been doing it for a huge amount of time and it's a side thing. But I just feel like there's things to learn here. Even if you're a great trader, I still feel like there's things you can learn, and there might be a small little thing that, in an hour-and-a-half stream, there might be one thing you learn, even if you're a 35-year, experienced trader kind of thing. So that's really the goal with these streams, is to find the little nuggets here. And for me, I'm more in the beginner camp, so I'm really trying to learn actively. So anyways, I see Bits of Wealth in the house as well, and you too. What's up, Bits, dude? Great to have you, man. We'll have to get you on one of these streams. Well, I kind of like these. I like both. Well, there's ones we do with two people, and then there's some that we do with just one. I'm kind of just testing this out with Josh because I've known Josh for a long time. We're good friends. So I figured we'd just jump on the stream, and he's also done streams a million times on his own community. So I figured he's just super comfortable to go and pivot wherever I need to pivot. So anyways, we'll get Bits of Wealth back on and all the other traders. But I think we got Josh's screen up, so I'll throw it back over to you.
Yeah. I don't know if this is the best example, but it is an example. Take a look at Bitcoin. Yeah. I mean, we could go through, we can also just pull up like a new stock if there's something you're interested in later and look at that.
Well, I think in the crypto world, people really only pay attention to NVIDIA, MSTR, Tesla, Bitcoin mining stocks, but that's pretty much it. That's all I can really think of.
I don't know if I have anything mapped on Mara currently, but I probably do on MSTR. Honestly, this is just such a chart. Yeah, it's just such a bad example because it's so parabolic.
Yeah, let's do something else. That's fine.
Other than that severe breakdown on the EMA convergence there, and the daily chart is
Coinbase could work maybe. I see Coinbase up there.
By the way, these EMA clouds are great for if you're like a trend-based trader. For anyone watching, and what these are, if you're on X, you've probably heard of Ripster, but I actually love using these Ripster EMA clouds. I do add some customizations to it, just a little bit. I just slightly change how it is. The one thing I will say is if you're using these and you're like on a 1 hour, make sure you go to regular trading hours here in the bottom right hand corner. Most brokerages will have a similar, your option might be in a different place, but your EMA clouds are going to be more accurate on the regular hours time frame, not extended hours. It's going to be a slight difference, but a slight difference is a big deal over a long period of time, right? Over 1,000 trades, a 5% difference is going to make a huge difference. So keep that in mind. But yeah, MSTR just looks awful, by the way. But we can. I mean, that's a pretty bad breakdown. Bitcoin looks like it's doing fine though. It's had a nice recovery here. So getting back to like the more educational thing, and especially what I think is probably easiest to pick up on and best for new traders is understanding key levels. And the thing to remember is that price basically has a memory, in that people remember a way a certain asset reacted when it achieved a certain price. And so when you're looking for something like a key level, there's three things you want to keep in mind. You want to know the number of times a certain price has been tested. You want to know you want to be aware of the time frame for which it's been tested. Longer time frames are going to have more significant key levels. And then you want to know the reaction and the movement of the asset price when it achieved a key level. These are all going to kind of tell you how important certain key levels are. So like when I look at Bitcoin right here, it's pretty obvious, right, that this 92,233 level here is a pretty big deal, right? We see a lot of consolidation here where it became, this would be a period where we call this resistance, where it's trying to break through. And I guess I shouldn't derail, but by the way, this is also like a really like clean ascending triangle setup right here. You can kind of see this triangle formation. We'll talk about that in a moment. But there's also periods where we see it then turn into support, where when the market comes and touches this level, you see this consolidation occur. You get some false breaks, but for the most part, you're watching the market kind of be a magnet to this level and turn it into this support and resistance. Yep. You then have weaker key levels. The other thing to be mindful of is the reaction that it has off that level, right? So, multiple times we've seen this level get tested, and we're seeing about, what is that, like a 12% move off that level, or that'd be a 10% move off that level, ended up turning into a 17% move off that level. And this is a pretty good level to trade off of, right? If you see it come defend, you can take maybe a futures position, or you could use it as an indicator for, okay, maybe I go long on MSTR. If maybe there's a key level that you could trade in tandem with Bitcoin. If Bitcoin broke over that or came and defended it, you could try and buy the dip. And the thing I like about trades like that is that I have a pretty defined like break, because I had this more minor key level like right below this break. So this would be significant, like right here. Typically, I don't like to do the wicks of candles. I like to keep it at the body of the candle.
I was also taught that in the very beginning of my trading thing. What's for anyone who's listening and they don't understand why, and they're like, but the price tagged that price, why would you not include it? What do you normally say to that?
It's about where the price closed more so. And that also applies on like longer time frames, or I guess I should say like day-to-day time frames. So if you're using something like Elliott wave analysis, you don't want to have the extended hours on, which we probably won't get in the Elliott wave analysis. It doesn't really apply. But the whole reason, better example, the whole reason why Ripster EMAs, so I have them up on here, work better in the regular trading hours than extended trading hours is the less noise that the after hours generates. After hours just has such low volume that it causes a bunch of noise on the chart. And when you go to the regular trading hours where there's more volume, more confirmation, less like wiki price actions, less like earnings noise, that's when you have the better data, right? It's like that. That is the same reason that you don't want to trade off the wicks off the candles, just applied, same theory applied to different concepts. Make sense?
It does make sense. And it's something I use even when I'm in the trenches in meme coins, even though most traders laugh when they say that, just because I'm like, hey, this is where people made big decisions. Like if there's like a bunch of consolidation here and it's just like this, and then a couple of days later, now it's in the same thing, but it's up here. That means like at this level, like a bunch of people were buying and selling. So like this level matters. You got to pay attention. Like those little fundamental principles I carried over into like the meme coin trenches. And even though I didn't become a professional trader by any means, it's giving me a significant leg up in the trading. Cause I'm like, hey, I think we have a bottom here, but if you have no background, you're going to get wrecked every single time. That's why I'm like, at least get a base foundation, like understand certain, like just some basic understandings and examples. I feel like it's tremendously helpful. And the payoff is like exponential in a crypto bull run, especially,
right,
because you have a higher chance of being right.
Right. Well, I mean, and the most important concept, and this is such a key concept, especially if when you're starting out, try to keep this in mind. You want to get into options trading and futures. First of all, both of them take very different mentalities, and they frequently certain personality types are going to excel at one over the other.
Interesting.
You could be a bit more patient with options, and futures is a lot more high frequency where you have to catch a directional quick move because especially if you're trading something like minis over micros, the trading the waves of the market will be so volatile and be such large swings into your contracts that typically it's a lot more dangerous to say, oh, I think the market's going to end down on the day, but we'll then ride all the waves all for the entire day in a futures contract is quite the journey that a lot of people wouldn't be able to weather, especially for minis contracts. It's a little bit easier with micros, but I kind of derailed myself a little bit, because what I really wanted to get at, as for the new part of your journey, especially why key levels could be so important, is because trading, I've found in my experience, is a lot like chess, where, do you play any chess, Cade?
I am not a chess connoisseur, but I've played plenty of chess.
Okay, yeah. So the first step at improving in chess isn't to learn like what the great moves are, right? Mm-hmm. The first key to getting better at chess is to stop making bad moves. Stop losing pieces for free, right? The first step is to learn like what good risk management is.
That's good.
And the great thing about having a plan is, even if it's a bad plan, it's a data point you can use to improve upon. And the great thing about key levels is you're kind of have your stop set beforehand, right? So this is my significant key level right here, where we have a touch here, we got a touch here, we got consolidation here, kind of here. We have these like upper bands, right? This is where I have the most touches. So that's actually like 1, 2, 3, 4, 5, 6 intersections with this certain level. I could come in and buy this level with probably a decent sized position, because look at where my stop is. Pretty much if you get below this level, right below it, I might whip out my Fibonacci's, or I might go to a longer time frame. I might hop out to my weekly and say, okay, it doesn't really work for Bitcoin because I didn't mean to draw that. Does it work for Bitcoin because it's such an insane parabolic structure? But that's what I would do, is I'd work out to my larger time frames and see, okay, is there any previous or past data that I can kind of see where there might be a level that we draw to? There isn't on this one, so I'd probably whip out my Fibonacci's. But what's important there is where my stop is. I've set my defined risk, and it's really tight. So I'm not really taking that big of a loss if we're talking about just straight up outright buying Bitcoin. That would be a significant loss if we were trading something like a futures product. But if we're just looking for an entry or exit on just purchasing Bitcoin, that's $1,000 change when the asset's $91,000. That's a really good risk reward right there, especially with the bounce. We know, okay, we can get a potential like 10%. Maybe on the lower end, it looks like we'll probably get something like 6 or 8%. So we're taking like, what is that? Less than a 1% loss for the opportunity to make like 10, 12%. That's good. That's good. That's what you want to see. And I have this really tight range. That is a type of trades that you want to take, where you are defining your risk beforehand, and you're also understanding what your stop could be. Now, let's say that the stop for the trade was like all the way down here. Like, let's say it was actually at the bottom of this like ascending triangle. Okay, I probably don't want to take this. I don't want to probably put the same allocation of money into this. All right, so I want to think about how much money I want to put in this is actually dependent on how much I lose, how much I'm willing to lose if we hit my stop. Thinking about the risk that you have right off the bat, and helps you control your allocations and make sure you stay in the game. A lot of trading is very long-term thinking. Okay, you want to get rich over 100 trades, not one trade. Which means you want to be able to take 100 trades, right? So I see so many new traders not think like this and think ahead of time of like, okay, what's my stop for this? Okay, so the amount of money I put into the trade is based on how much I lose if I hit my stop.
Interesting.
So many people aren't thinking about that to control the sizing of their trades. If you don't think like this, and I see this all the time, if you don't think like this, your performance on the market is most likely going to look like something like a sideways chop, and then you're going to get these like large plummets down, and you're going to be like sideways. for most of the time, right? Because you're not sizing based on your risk management, and you're likely not sizing based on the quality of the setup you're having, using some of those other indicators that we talked about earlier that I like relative volume, average true range. I also, as you can see, have a TTM squeeze and RSI. We can talk about those later if you want. But this is actually what I would call like the amateur performance, right? You know, it's actually not that bad, but it feels awful because you can do this.
Awful.
You can do this. I've done this, but I've traded like this for like a year before I like really figured things out, right? Where you're not losing money, you're not blowing up, but you're not making like you're not growing. That's not what you want, right? You're not going anywhere, and you feel like you're almost there. It's actually one of the worst places to be. And I remember I sat there for like probably over a year. You know, it was probably like year 4 of trading. Because for the first 3, I just lost tons of money. But yeah, and so when you start to learn to size your trades appropriately, think about the quality of the setup and think about the potential losses you could have based on where your stops is. That's when you can actually start to have that nice exponential increase to your account. Then you're slowly growing, and you're still going to have down days. You're still going to have to lose some trades, because at the end of the day, what we do is we operate and we think in bets. Right. Yep. We're always thinking in bets. Everything's a probability. I don't like to say that my trade lost. I prefer to say, oh, the 30% probability hit this time. Right. That's kind of like how professional gamblers work. Protects the mental, keeps you from going through a negative spiral. Right.
That's so smart, actually.
Yeah. So when you're so that's just such a key mindset to have, tactics to use, practices to have. You know, this is when you're more of a pro. You're a pro.
I was going to ask.
Yeah, go ahead.
So, well, 2 things. Bits is loving this stream, by the way. He's in this stream. He must have been curious because you've been in a lot of the spaces. So he's loving it. He's saying you're spitting facts. Yeah, the only thing you can control in trading is how much you're willing to lose, he says. Yeah, with the first thing I learned, or one of the first things I learned when I got into the trading world, I got really lucky in Seattle because I was living in the city. And so I was able to meet up with some other people who were living a similar-ish kind of life, entrepreneurial, trading, content, that kind of thing. And they had this whole group of traders out there. And I was like, so I don't understand this thing. So you buy them, you make the bet. And like, if you're right, like that's great. But like, what happens? Like, what happens if you go through a period where you just keep losing? And he was like, well, it's fine. He goes, because the risk reward we take is we don't take the trade unless this risk reward ratio meets like our threshold of like, okay, good enough to enter the trade. He goes, if it's not worth, it's not worth jumping into a trade that has a 2-to-1, risk reward, because I'd rather just get into a 3-1 or 4-to-1 risk reward. He's like, because I have way more upside in that scenario, and I still might lose that percentage of loss, like you're saying, the 30%, whatever. That's genius. I really, really like that. Will you repeat that one actually one more time for anyone? Because that's a really good mindset hack. It's not to be like, I keep losing, but it's just like,
yeah. So, I mean, every trade is just a probability outcome, right? If I do a setup, this is part of like why you should keep track of your trades, and have the data to look upon. But if I have a particular setup, like let's say, I have the post earnings setup that I really like. It's like a gap and go. The stock has a give in the direction of earnings and then has a quick retracement. If I do that setup 60 times, it works 80% of the time. Then I know, okay, out of 100 trades, I'll lose 20, because that's just how probabilities work. So when I lose the trade, I'm like, okay, there's that 20%. The 20% has to happen. That's just how it works. That's how the game is. All you're thinking in bets. So you didn't lose the trade. That was just your 20%, and you take it 100 times, you're going to lose 20 times. You're going to win 80 times. So understanding how to accept losses and understanding that losses are part of the process, it's a necessity, then you don't like freak out when you lose money. It's like, this is how it goes. This is what the game is, So And that's so important because when people mentally spiral, it's when they blow up their account.
Yeah.
You know, there's so many people when you talk to them and then they blew up their account and you're like, what happened? And they just stare at you and they're like, I don't know. and I know that because I've been there. And the reason it happens is because you just start emotionally knee-jerk reacting to things.
Yeah.
And then the logical part of your brain just turns off to where there is no explanation because it was stupid. You know,
Yeah.
So there's nothing to really explain it. But you see that happen all the time, very frequently to traders. You know, even people who've been in the game for years, they'll slip on the discipline, they'll start to spiral, they'll try to revenge trade. You know, there is a certain level of confidence that comes with experience in the game, though. You know, if I blew up my account tomorrow, I've been doing this long enough where I'm like, all right, well, that sucks. I'm upset, but I'll build it back.
It's kind of the same with content with me. Like I've been in the content game in the crypto world for so long. If Wolf disappeared tomorrow, it would suck because I really like it. But I'd be like, okay, whatever. I'll figure something else out. Like I agree with you. Once you've kind of dove in deep enough into your expertise, I agree. Also, quick follow up: if you go back to that amateur and pro thing, when someone's in an amateur bit of a time period, and if it's not going to be upping the size of your bets when you're confident, what other key factors play into getting out of just chop? And what are some of those small? Because I guess I was going to go into the indicators and say what indicators matter the most, but I guess I'll ask this as more of a two-pronged question. Like, what matters the most to get those incremental wins? Is the best way? You mentioned sizing up on the confident trades. Is there anything else that comes to mind? Is indicators the next thing that comes to your mind, or what do you think are some of those key factors?
You want to, the most important thing is not making bad trades, which is, are you familiar with the term resulting?
Resulting?
Yeah.
So
no. In the gambling world, the professional gamblers will use this term called resulting, which is when people attribute outcomes to the quality of their decision-making process. So someone will say, oh, the trade lost money, must have been a bad trade, which isn't always true, like we talked about with probabilities. So a lot of amateurs are doing that, and then you stop that, and then you just start thinking about, like, okay, given the information that I had on the chart when I took the trade, was it actually a bad trade or a good trade? So, because and I admit it, and it sounds kind of arbitrary until you start executing this and start playing it out. Then you're going to start to recognize, like, oh, well, some of these really good trades I took lost money, because sometimes you are truly just unlucky. And sometimes you're just playing that other side of that probability, the smaller portion of the probability. So you need to understand when you've made a bad decision and when you were just on the wrong side of the probabilities, and because what that is going to do is allow you to slowly progress your decision-making process. So that's the first thing. All of that is just to conceptually define what your path is towards getting better. It is a way to actually quantify that. Okay, I actually am getting better, not just off the performance on the chart here. The performance of the chart for the amateur might struggle to feel like they're actually improving. That is a way that they can get it on paper and actually quantify that they're improving. And that is so important, just like arbitrarily being like, well, I feel like I'm getting better, even though this chart doesn't say it. So that could also be like a big mental breakthrough, right? I'm a huge fan of the concept that the momentum starts in the mind, not in the market. Okay. It doesn't matter if it's a bull market and everyone feels like it's easy to make money. If you're not in a good spot mentally, you're going to lose money. You're still you're going to find a way. It is possible in any market. So, the momentum starts in the mind. So making sure you have these quantifiable ways this clear, concise path of what it means to actually get better, what it actually looks like to get better, is a big process. Now, when we're talking about the actual execution and we're talking about technicals, I'd say that the relative volume and key levels right out the bat, probably two of the best indicators for short-term trading. You probably want to have that in tandem with the average true range. So you're looking for a stock that has had Rumble is actually a good recent example. We had a killer Rumble trade recently. Let me see if I can pull that up. So we had multiple great headlines on Rumble here. We had the big jump in the stock. I can't remember what order the headlines came out, but like Tether took a big investment. Rumble bought Bitcoin, and there were like several other hedge funds that took big investments. So we get this huge jump up price in the stock. And you can see this big spike in the relative volume, which is the bottom section right here. Okay, this massive spike up. We can look at the SATI ATR levels. I love this indicator. There's multiple ones you can use. You don't have to use SATI. That's SATY. But we can see that, okay, the daily range typically is $1.60 right now. Okay. And then on the day where it obviously doubled in price, obviously we're outside of that, or obviously we're outside of that range, right? That is an indication of me that we are witnessing the efficient market hypothesis, where the market is actively trying to price in new information and reprice an asset to what it should appropriately be priced at. It's in those periods of time where then I want to be executing trades, because it's in that volatility that I think I can actually have edge and make money, right? That prevents you, if you're not using simple stuff like that, and you're just like, let's say trying to day trade. Actually, we actually ended up getting some decent price action, but let's say you're just trying to trade this choppy noise on the SPY right here. This is miserable, not impossible, but it's a bit miserable, at least for my trading style. Yeah. I'm trying to, let's see if I can turn that white. It's like impossible to see. Okay, there we go. So when I look at something like that, that looks like noise. We're not even breaking the orb. For those unaware, this is a lot of information, but the orb low would be like the first 15 minutes of the day. You kind of set your ranges here for the high and the low. So we're looking for like 845. Okay, looks like that's the low on the day. And then the orb is when you take your trade potentially on a break of that, because it means there's usually going to be a trend develop. It looks like you have one fake out today. Because again, this price action today is very obviously trash. But this is an actual confirmation. This is a real move, right? And if you get below yesterday's lows, I say that's another real move. But overall, we can see that our relative volume is below 1. That's a bit seasonal as well. This is typically a low volume time of the year. It'll pick up probably later in this week after our break day. But using those technical indicators when you're evaluating like what kind of trades you want to take, where you can find your opportunities, or I shouldn't say opportunities, where you can find your edge. Because remember, you're competing against other people. You want some sort of edge on the market. You want to say, okay, when am I actually going to get movement on this? Where is it more likely that I'm going to get a trend development? And for me, it's when the market is, I found when the market is actually pricing out this efficient market hypothesis. Yeah. This trading style, there's plenty of trading styles, but this trading style could also feel a bit weird for people, because it's like, this stock just doubled and now I'm going long on it. So it could be a difficult methodology for trading, but I want to play into that momentum, because I feel like that's where I have my edge. And I might not have a ton of trades. We did have in my Discord community, we have a trader who has a bit different style from me, and he actually bought Rumble like back here and bought
Wow.
multi-year leaps on it. So he caught the full move,
Wow.
just because fundamentally he thought the company was solid. But that's more of like a catalyst trading where you're like, okay, you evaluate the fundamentals and you're just looking for good news to come to a company that you think is fundamentally solid. You just buy a lot of time. I'll take trades like that if I have high convictions on something. But when it comes to my actual day trading practice, which is more of what allows me to consistently pay my bills, it gives me, I wouldn't say consistent income, but livable income.
Yeah.
So is setups like these, and my stop here would be, the 1130. When I took it, that was probably based on I actually remember how this trade went. The 1130 is, I think, based off a longer time frame here. Yeah. So 1130 is the stop because of the, let me change the color here, because that's kind of like the bottom of this gap and where we see what was previously resistance for this stock. Oh, I just circled the wrong one. That is a key level, but here's the 1130 stop. Resistance. Remember when we started, I said I was really tired. Anyways, so 1130 was my stop. After the gap up, I took the position, and then I was using the 1 hour EMAs as what would be like a trailing stop. So this is green one right here is your 921 EMA. We kind of came back and touched it, but we didn't break it. I remember this trade actually went like 43% against me at one point, but truly this is an A setup though, right? We didn't come back and we didn't test that 430. Additionally, on the 1 hour, we didn't get a true break of the 921, which tells me it's still on a very bullish trend. I think the market is kind of pricing out the sufficient market hypothesis. Then we get this nice pump up. I think it gapped up like 140%. Within a day, and then I kind of took most of those profits right here at this previous all-time high. I had left some on to try to hunt for the all-time high. However, I was very aware of the fact that this thing was starting to get extremely overbought, so a retracement should come in before new highs.
Based on what? Like when someone sees this and they see those little triangle, little iceberg looking things, they're going, what does that mean?
Oh yeah, so this is your RSI. It's a relative strength indicator. When the RSI is over 70, it typically means that an asset is overbought, and when it's under 30, it typically means it's oversold. Those really aren't. I should say those really aren't. If you just trade off of that, and you're like, well, I'll just short it when it's overbought, and then I'll buy it when it's oversold. Yeah,
easy.
That's not going to work.
Yeah.
So what you want to look at is in the structure of the RSI or the divergence. If there's a divergence between the RSI and the stock. So I'll try and think if there's a good example that I could pull up of one we've taken recently. But if the RSI is trading sideways while the stock is accelerating to the upside, it's often an indication that it can keep going higher, right? It can keep pushing higher. Or there's other examples of divergences. But when RSI is not trending in tandem with the stock, those are divergences. Those divergences can turn into like quick day trading opportunities.
Will you ever take a trade just off one indicator? Has that ever been a thing, or do you primarily stack indicators and say, okay, now I'm confident in this trade?
Yeah. Oh, yeah. And that would be, in my opinion, one of the key things that has led to my success is, if for members of my Discord, I have a whole rating system I use and I explain it to them. It's a point system. If, based on if there is a good catalyst for a stock, based on if there's a good key level achieved, and based if there is, what was it for? Did I say catalyst already? And then based off of the market breadth. So is it moving in tandem with the rest of the market? Market breadth can be really important when it comes to hunting for something like extension, right? If the market's not bullish, then a stock might not get as much upside, and that's just understanding like just market behavior in general. But if the whole market is bullish, then it's more likely that we'll get good continuations, right? So having a point system like that, not only just for those three things that I listed, but also kind of how many technical signals am I getting, or it's a bit more complex too, to also maybe have the data to rely on. Okay, how good are these technical signals I'm getting? What is the reliability of these that I have seen in my own trading? Can then lead to you developing some sort of rating system, like an A, B, C, D type of rating system, where you could say, okay, if something's a C setup, maybe I can play like $1,000. If something's a B setup, maybe I can play like $5,000. And if something's like an A setup, maybe I can play like $10,000, you know? And understanding like, okay, the level of this setup relates to how high the convictions are in it based on a number of factors. But if I develop a point system, I can actually quantify that in some reliable way, you know, and then have the data point to then look back. Okay, are my A setups working? Are my B setups working? You know, each one should have a higher probability of success. If not, go back to the point system I'm using and saying, okay, what's not working here, right? You want to try to really just map out as much stuff as you can, because there's so many people who just operate in the noise of like, I thinks and I feels. And I thinks and I feels are little demons trying to take your money. Okay, you know, and you want to get away from them as much as possible.
Well, this is the only sector where I feel like it's extra important, because especially in crypto land, where all our conversation is quite literally tied to our bags. So your skill and the way you're growing in this particular expertise is so directly tied to like net worth. For a lot of people who are starting, they're like dumping the $1,000 that they have to their name into the account. And so it therefore matters a ton. And so every single, you know, move that they make is extra heavy. And I feel like that because of that, you have to pay like extra attention, you know, and learn these fundamentals you're talking about.
I just want to say,
what are you about to say, Josh?
Anyone can make money in the market. And anyone can even get stupid lucky. You know, it doesn't make you a genius to win the lottery. And there's a lottery every day in the market. You know, what matters is how consistently can you do it and develop that longevity and develop a process. You know, I might not hit, you know, $1,000, you know, meme coin every month, but I can consistently make, you know, 20 to 40% return, even on kind of cruddy days, on a trade in the market, right? So I can consistently make income to the point where I can do this full time. You know, and there's a whole bunch of like life philosophy behind that as well. Probably shouldn't get into. It's not helpful to you. But there, you know, really, there's a reason why I don't like share like look at the raw dollar amount I made, and I try to focus when I make content. It's at my disadvantage, but sure. I think it's important I think you should lead by example, and leading by look at this big number, I think isn't doing a good job of that.
How about a Rolex? You know, like just try a Rolex instead. It might feel different. You know, it's on your wrist. You're like, hey.
Well, you're just baiting me into the you're baiting me into the philosophical conversation, which is
I know, dude. It's a good conversation, but it is important though.
Okay, so then I'll give a.
We can stick on. We don't have to go all the way down, but we can.
I'll give you a spark notes. Like when I started trading, I've just never been a very materialistic person. So I live like a very simple lifestyle. Like I have one nice watch. I have one really nice pair of shoes. I have one really nice suit. I do have nice things, but I don't spend a bunch of money on stuff because I don't care. That stuff doesn't make you happy. The same thing with like, you know, a lot of people when they get into trading, they have this idea of like money is everything and they dream of like big numbers, but you need to start thinking about like how much money do you actually need to have the lifestyle you want to have? Like, what are the things that are going to actually make you happy? And setting like realistic goals and ideas of what you want and understanding what the numbers are to make that doable is just going to improve your life phenomenally. You know, it's also going to help you better come to the conclusion that money is just a tool. It's just, when I got into trading, I was kind of lucky with the mentality I already had. And it was the reason why I was able to weather losing so much money, because it's just money. You know, I would lose some money. I'd be like, it's just money. I can make it back. I can, you know, I went full time and I was like, well, if I blow myself up, it's just money. I can make it back. You know, I can go back to doing a sales job. You know, I was, you know, making around like 6 digits, and I could go back. I could go back to doing that any day. You know, it's not really like life ending. It's just money. So like understanding, you know, being realistic about that, understanding it's just a tool, not some sort of deity to worship, and also being reasonable about the things that are actually going to make you happy. Some people do like really nice stuff. I like really nice trips, vacations, experiences, because when I look back in my life to date, those are the things that I remember. Those are the things that stand out to me. Those are the things I like to reminisce upon, not over some sort of pair of shoes I bought. And what's, I think, the most important to me has been relationships. It's been my family. It's been my wife, my child. And, you know, I like buying them nice things, but it's also even to that extent, it's not things I really remember. It just kind of makes me happy for a moment. It's very fleeting. And what I remember the most is like when we go do stuff, or when we have experiences, or my son's is 1 month, 3 days old, and he just got his first bath, and that was fun. You know, to kind of put him in the warm water, and he'd sit there and be like, "Whoa, what is going on? Did I pee a lot?"
That is the crazy. It's so funny because you're like out here expert trader, then it's like, help me clean this baby. You're like, I don't know what to do. Like, how do I hold this thing? Like, that's so funny, dude. Do you think do you think, you don't have to go down this rabbit hole if you don't want to, but do you think because we had a conversation about this like on TikTok Live or something like a year ago, when I had quite literally converted to Christianity, like just in this crazy life altering experience. But do you think your faith or reading the Bible or any kind of background in that has helped in terms of mindset, philosophy towards money? Because money and debt is brought up a few times, you know, in the Bible and teachings around, you know, just like doing things you shouldn't be doing / cashing checks you don't own kind of thing.
Yeah. So we actually have, funny enough, a pastor named Soka, who he isn't a trader, but he's one of our Discord members, and he leads a Bible study for all our members every Friday at noon. Yeah. And we've been doing a lot of lessons on what the Bible says about money, the relationship you want to have with money, and it kind of surmounts to everything I said, but also goes into some deeper topics on you know, harder for a rich man to get into heaven type of genre, you know, kind of warning against excessive greed and things like that. And I think it just kind of, if you really wanted to simplify it, but kind of miss some of the nuance, you could say it's just don't put it on a pedestal, you know, it's not everything. It's just money. Money comes and money goes. If you've been trading for a while, you're going to develop that, whether you want to or not. Anyways, watching, you know, especially as your account starts to grow and you watch big numbers evaporate and magically appear upon a screen, you really just start to develop the mentality of like, this really isn't that important. It's just money.
You know, one thing I heard from it was Dave Ramsey. And by the way, like, for anyone who's uncomfortable, we're not going to stick on religion for this trading space. I do think it's important because I feel like it's not this sideways genre that doesn't need to be talked about except at church kind of thing. I think it bleeds into just about every aspect of life because it's your philosophy toward the world when you make decisions, pretty much. And it's the background in which you make those decisions. But one thing Dave Ramsey says, which I didn't even realize he was a Christian until, like, you know, years later, but he was like, his mindset towards money a lot of times, I think it was him or maybe someone on the Ramsey team, but he said, it's just God's money. I'm just managing it. Something along those lines. He was like, it's not my money. He's like, it's just here. He's like, it's going to be here. It was here. I'm going to be here. I'm going to be out of here. He goes, but this stuff is just here. So I'm just managing it while I'm here on earth. And I remember thinking that takes a good amount of pressure off, because like it's just this thing that helps you out, can get you things if you need, can move you to places if you need to. But it's just this thing that's kind of here, kind of not here. At some point in your life, you won't care about it as much. At some points in your life, you'll need it a lot more. It's a very philosophical conversation. That's why I wanted to go down the rabbit hole. You can't talk about money on a deep level without introducing the philosophical side of things, you know?
Yeah, you're right. You're right. And I like that. I don't think I've heard that before. But, I really like that concept.
That makes sense, dude.
I think it's
Makes
good.
sense.
I think it's healthy to have some sort of like, psychological, a healthy psychological relationship with money. You see a lot of people who are obsessed with big number. I want to be a billionaire, and then they freak out when they lose, $1,000 trying to learn how to trade, and they give up.
Yeah.
Because they're like, oh my gosh, I lost money, and money's so precious, and I can't lose any money. And it's like, okay, but you're building a skill set. You're building a skill set that you'll have forever. And while the same indicators might not work through every market environment over the time horizon of, let's say, multiple decades, they'll always be usable, and the process of learning them will always be applicable. The process of improving will always be applicable. And getting good at one thing is going to let you get good at other things, right? Learning to use one indicator appropriately or one trading style to a high level or high degree is going to allow you to branch out to other ones more easily, because you've kind of mastered the process of improvement and mastered one area of expertise. That level of mastery is going to allow you to branch out more. I was a horrible futures trader for a while, gave it a break, got really good at options, came back to futures later because there was like a huge demand from our community. Everyone wanted to, we had so many new people join that wanted to do prop fund trading. And I was like, okay, I didn't even know what that was until literally like a year. I guess it would be like a year and a half ago now, but I had never even heard of prop fund trading.
Really?
Yeah.
No one had brought it up to you like, hey, give this a go?
Nope. I had no clue. People were like, oh, yeah, you go to Apex, they give you money. And I was like, that sounds pretty scammy.
It does.
Yeah. And so it's legit. I don't know about Apex, but Top Step X, I've had a lot of success teaching people how to use that one. You're following these rules and you're trading futures, you're using someone else's money, you pay like $50, you're going to be more like $200 in after you pass your account. But I've helped, over a dozen traders, like just in the last like 2 months, pass their Top Step X accounts. And that's from someone who, just over a year ago was not good at futures at all, but I was good at options. And then I stepped back into futures after developing a lot more mastery with options trading. And you can't, I found that you can't really use the same indicators, but you can do a variation of the what I like to use for options, follow the price action, and have some success with futures. I don't know if you want to get to that, but I found that it's easier to branch once you've mastered like one thing. A lot of people, especially, I do a lot of mentorship and a lot of teaching, and I feel like I might be getting good at it. But a lot of new people that I get are like they're bouncing around. They're like, oh, I just learned what a stochastic RSI is, and then I want to use like Kerner levels, and what are these DeMark indicators? And then they're like jumping from like thing to thing to thing to thing to thing to thing to thing. It's like, okay, let's try to focus on one thing, master it to a high level, then try the next thing, master that to a high level, learn all, because when you're running a million miles an hour and you're going literally nowhere.
That's a great visual right there.
Yeah.
You're doing everything and accomplishing nothing.
Yeah, exactly. So, and I get it. I am a really open-minded ADD person. So I understand the chaos of like finding everything interesting and not being able to focus on one thing. A lot.
For options,
but
though,
you want to combat that though.
Yeah, I agree with you there. While I've got you here, and you've been trading everything for a long time. But the thing I know you most for probably is the options. When you're going through and you're looking at a chart, your eyes are automatically going to zoom in and pick up nuances that are relatively. You're not going to sit there and think through every single step of the way like a beginner trader would, and be like, oh, this indicator checks out. Like your brain's kind of doing it all at once when you look at the chart, and you're zooming around looking for this thing. Oh, I remember this from last week when I marked it up. But when you're looking to mark up a chart for options / approach a trade, what does that strategy look like? You mentioned that sometimes you'll stay up to date with news and you'll pre-run something like a Rumble. Like what kind of prep goes into it? What does it actually look like from step 0 to completing a trade, especially with an option? And what are some helpful things that you kind of go through in your head?
So I get like a Bloomberg's newsletter. I kind of keep one eye on X and like Walter Bloomberg, and that'll frequently pop up like different news stories. Those news stories will then bring new ideas or to my attention. Like the Tether investment in Rumble was something that was brought to my attention, which then made me look at the chart. We should maybe go through the analysis on the chart, set these key levels, look at the rest of the stuff from there. So typically that's what I'm going to do when it comes to following the news. A headline happens. There is this little bit of like experience that goes into that, though, being able to know whether a headline is actually significant or not. If you're unsure, just go look at the stock, right? If you're unsure, look at the stock and then watch it for a few days and look at the relative volume. Did a trend develop or was it just a pop in and give? And it went back to its normal trading, average true range, right? Goes right back into that true range. Then you're in a chop zone where you're going to be competing against these, Harvard student algos that are just keeping it in a specific range, and these big bank CTAs, that's where you're going to get just slaughtered by. Yeah. I don't want to compete against those people.
Yeah. Me neither. I'll stay far away from them.
I'm not out here to 1v1 a bot. Okay. I play Call of Duty. It doesn't go well. Yeah. Yeah. So
that's funny.
So, that's part of the process. Developing the experience and understanding what headlines actually matter, are significant, could have ripple effects, kind of like instantaneously in a moment being able to understand, okay, what are the ripple effects of this piece of information? Or, what are the possible outcomes for the future of a company? If you, one company in particular that this was a wrong prediction I made at the beginning of 2024. I don't see the chart up here, but we can pull up the chart. Was I thought Uber was going to be cut in half in 2024. And that was due to my anticipation that Tesla's self-driving would make huge innovations this year.
Okay.
And so, understanding like the relationship that companies share within a competitive environment and what their moats are, a moat being a competitive, the reason other people struggle to compete with them. There can also be a great idea generation for trades. The other process I go through that would be significant enough to talk about would be developing a watch list based on trends, on like greater social trends. So like I actually have like a AI watch list.
Oh, that's great. Little subcategories. And
so like AI gets big, and this could be as simple as like going to Google, what stocks use AI? All right. There's going to be a lot of noise there because, obviously when AI got trendy, literally everyone was saying AI like 100 times in the earnings report. Suddenly everyone had some sort of AI. So you're going to need to do a little bit of analysis to kind of to trim the weeds.
Yeah.
But this is really popular. Everyone's, paying attention to this. I better go through and keep an eye on these companies since this is a trend. I don't have a specific quantum watch list, but I added like a bunch of quantum names, as well. RGTI. IonQ, Qubit, I think are going to be the big ones. And then there's companies like Google and I believe ANET that also shares some sort of relationship in quantum.
Mm-hmm.
But understanding like what is the big trend, and okay, as soon as you recognize that there is a trend developing, that there is a market favorite, that's a lot of these stocks are making parabolic runs. Qubit, IonQ, like all of these like exploded. I mean, this made, I made like 400% on IonQ
Wow.
shares, and I sold like here like an idiot. So I'm looking for dips, but
Dang, the very first pump.
Yeah, right. We're still like, this is where fundamentals could play a huge role, right? But we're still like probably like 5 years minimum away from these things having like actual commercial use. Market gets excited when things are green. Everyone starts thinking when things are green, everyone stretches their horizon out 10 years and thinks about all the things that could happen.
Oh, yes.
Is the market being high efficient though? Because it's thinking about all the things that could happen in the future, green horizons. And then when something bearish happens, the market's being efficient by saying, oh, these crises or these bad things could cause these green horizons to no longer play out. Now we adjust for that. It is a market being efficient, both when it's in a bubble, reacting to what's going on at that time period, to what is going on when things are more bearish. Like it is a certain level of efficiency. And lots of people will argue with it. You get these fundamental guys, so many people, investment bankers or CFAs, very smart people, awful traders, right? They maybe even a little bit on the spectrum, not recognizing that there's the human aspect to trading. Like, oh, why is this trade at such a high multiple? Well, everyone loves it. If everyone wants it, it's going to trade at a high multiple. That's like saying, why is the Supreme sticker cost $500? Well, everyone wants it. So it's going to have a high ticket. And that's just what it is. It just, if everyone wants something, it's going to be more expensive. So your fundamentals are going to fall apart when everyone wants, everyone's favorite is, being driven up by the increased demand. So yeah, I just wanted to throw that out there because that also holds a lot of people back, where they're not thinking about making money. They're thinking about being right. And I hope that makes sense. Yeah. Because you have to have a certain level of humility. I'm not out here to be right. I'm just playing probabilities. The market makes me money. I don't make me money. My job is to sit here and cut positions.
Yeah, pretty much. Wow.
I just taking probabilities. So I hope that was helpful. Any more questions?
That was. Well, I think that was pretty helpful. Yeah, I think we're a little bit. Well, I guess I was kind of late. There's some technical issues that we had. I'll probably. I think this might be a good way to kind of have a final question. But for someone who is building out an account and they're doing well, they're past the beginner stage. They've got, I don't know, 10, 20K, something like that. They've leveled up past the 1K type of area. So they're playing with 5 figures now. They're like, okay, I know a little bit. I'm relatively confident. Does my strategy need to change? Do I need to change the way I take risks now that I'm dealing with different money? I feel like there's a lot of people in transition modes when they're going from 1 to 10 or 10 to 100 or 100 to a million. In your experience, is there anything that they should change, or what's the mindset here? Or switch?
That is such a fantastic question, Cade. So, all right. And this is so important to understand yourself, right? This is a mental super sport. I dare anyone to try and tell me what other profession needs this level of emotional control, because as your account grows, it can really start to mess with your head. One of my there's several traders who operate Nobel trading with me. I'm like the lead trader, and they have different styles, but they've either been students of mine that are now full-time and have kind of leveled up, or they're traders I've met that have like wanted to operate under the brand name, and they wanted to like they've been bought into what my mission is, which is, you know, to educate from not a flashy standpoint, but from just a solid principles. And one of my traders, he can't handle his account being more like 50K. It starts to mess with his head, and he starts to recognize that, because in the positions he takes within that account get too large, and then he gets too emotional when he takes them. And so he's really good at growing accounts, but he now has like dozens of accounts because when it gets over 50, because it gets over 50K, he opens a new account because it starts to mess with him. He does have stock accounts and like long-term accounts that are larger than that, but it doesn't mess with them because he doesn't look at them. You know? And so understanding that there's a certain level of a position size you take where you can feel immediately when it moves that it is affecting you too much. And you can slowly over time work up your tolerance to that and slowly work up to handling those larger amounts of money, because it takes time to build up like this, to get that you know, that Teflon, that resistance, that thick skin to watching losses happen. Okay. You're never going to not feel those emotions. You're just going to be better at moving through them, if that makes sense. Like feeling it and letting it pass, you know,
and taking a huge loss. You're like, crap, I just lost that money.
Right. And some of that's going to come with confidence. You know, as you get better, you take a big loss and you're like, been here before. But that experience, you know, blowing up accounts is just a part of your storyline. If you keep with it and you make sure you're actually improving. But it's such a big key to success to listen to how you feel when you take a trade. How did that make me feel? And was it kind of pushing me too far into an emotional reaction when I was in the trade? Was I wanting to cut before I stopped because I was losing so much money? And am I no longer operating within the principles that allowed me to make that money? Okay, then your positions are too large. You need to size down on that. Are you feeling a type of way about how much your account has grown now as well? You know, even in that aspect, are you not able to, this is one that applies to me. I cannot trade in my investment account, or I start trading my investments. My investments have to be in a separate account apart from my trading account, or I start trading my investments. I start trading the Tesla stock. I don't want to be doing that. You know, I just want to hold that and let it sit.
That's funny.
You know? Yeah. So, because then you want to react to like every wave, but no, the point of I guess I'll just add, I feel like I go down so many trains of thoughts, but I think this is very important. I still invest as a trader, and a lot of people, especially on the socials, on my TikToks, everyone's like, if you're a day trader, then why are you invested? It's like, well, all I do is probabilities. And the probability that has the most success is time in the market. Time in the market works. So if I have a probability that's 100% win rate and I don't do it at all, that would just be stupid.
Yeah, that would be stupid.
Yeah, it would just be stupid, right? Yeah. So
that's like buying the number 700 crypto and not buying Bitcoin, and you being like, hey, by the way, Bitcoin's the reason your coin's going to go up. Like, your coin's not going to send if Bitcoin goes to zero. You know,
right? So. Exactly. So time in the market works. All I'm doing is trading probabilities. So of course I'm going to have some money in the highest win rate probability. But you know, back to the point of like understanding the way that things make you feel and having the separate accounts, or lowering the position size until you build up the tolerance and you can slowly work to larger position sizes. Or, you know, that is one of the differences as well. When we're talking about the emotional access, that's one of the major differences between something like futures and options. With options, you're able to scale up your position sizes kind of more exponentially as you grow your account, right? With futures, typically you're just going to be trading with the same like number of contracts over time. You're not, especially for prop fund trading, where you're not going to at all really up the ante on your position sizes. It's more of like a consistent. Is that it? Yeah, I think that's the right way to say it. It's more like a consistent salary that you have, and options is more like you get a raise every year for good performance. Is so
okay.
And so I think it's the best way to say that. So those both like have different like emotional taxes for the practice of them and the execution. So that's something else to consider, is that, stocks as well are not going to have, stocks aren't going to go to, unless you're doing penny stocks or something. But, if you only trade shares of, your S&P 500, you're not going to go to zero. You're going to just, that's also going to have a different emotional toll. So understanding what your personality fits best with, maybe trying out a few different things, can also maybe be the key you need to success. There's, when I say all this stuff about how I trade, what works for me, that's not the only way to trade. I know people that trade differently, sometimes wildly differently. And this is just what works for me. This is what I developed over time, what has been good in my experience. You might have a different methodology based on, your own personality type that fits better with your style. Maybe there's people who only short markets, and they just hunt around for stuff to short.
That's so interesting.
All they do, that's all they do. For me, that's wild, because markets mostly go up. So hunting for only short positions sounds miserable. But it works for them. That's what they do. So, there's
they're making money, bro.
Yeah. So there is no one way to, there are some bad ways, but there isn't one way to skin the sheep. I don't think that's how that saying goes.
Well, I think it is skin a cat. I was going to say that's actually the best way to wrap, because my final question to like lead us into the outro was literally going to be, two things. What should you stay away? Are there any that you should definitely stay away from? Like, hey, if you hear someone say this, just stop watching the video, kind of thing. And then are there a couple that people can take and go straight into YouTube from this podcast? And then the follow-up, the reason it's going to be a beautiful transition was, if you want to join a community, you can join the Nobel Discord, which you can go to their his Twitter and find, or if you're on YouTube, go to the description and click his Twitter, and then you can find it in his bio. But does anything come to mind?
Well, first I'll say we're free now. We used to.
Okay.
We used to only we do have a paid tier, but we are free to join now, and there's a lot more that we offer for free now than we did previously. So, including like weekly setups and sharing trades and the mentorship. Our weekly classes are free, where I'll weekly do what I just did with Cade. I do what I just did with Cade on a weekly basis and answer people's questions in real time in a Discord voice call with them. So, and then we also have licensed financial professionals in there as well. We have a hedge fund manager. We have one of the top seeking alpha analysts who also teaches the class. We also have an option seller class. So we, I'm trying to basically build my own like finance university, where we do just a lot more than just trading at this point. Yeah. So that all of that is free. Those classes are free. It's free to get into the Discord. Not everything we offer in the Discord is free, but it is free to join. And there's a lot of stuff in there, a lot of value, because it's my goal to try and teach. And I think education should be free. And I'm your other question was, okay, things that people say that you shouldn't, that should be red flags. That one's a bit hard, because I don't know every trading style, but things that do kind of raise red flags for me would be someone who's promising a consistent daily income. I hate the concept of a profit target, like a daily profit target. I think that is self-destructive mentally to set daily profit targets, because it puts you in a position where you're like trying to force trades rather than let trades come to you.
Yeah.
And I found that leads to shitty win rates. And inopportune. You just forcing things that just you normally wouldn't if you weren't like trying to hunt some sort of, my experience with this is on average, you could probably average out my income to something that was a nice like daily income, but that's not how it works. It's not a daily income. Some months I make someone's salary, other months are just kind of like, well, I guess I starve now. I should probably say weeks rather than months, but that's more of what it's like. And it's the ebbs and flows. This is not a consistent profession. This is an opportune profession. This isn't like sales where the harder you work, the more you'll make. Okay. Or the more time you put into it, the more you'll make. The market tells you what you can make. You don't tell the market how much you're going to make. So that's usually a red flag to me. Other red flags. Someone tells you that they got like the next Amazon is a huge red flag because most of the money is made in. There's not a lot of liquidity and kind of lots of people like to hunt for like obscure names or they're like got this brand new stock, and typically those aren't even very liquid assets to trade until they become like a Tesla or Apple. So don't spend all your time hunting small crap you've never heard of. Just play what actually has a lot of volume, which is going to a lot volatility, especially as you grow your account. You're not going to be able to trade some of this small crap. There's some people one guy sent me a meme coin with like a $13,000 market cap. And he's like, you should buy a bunch of this. And I was like, what do you want me to be, the sole holder of it? Like,
dude, those are the funniest because you'll make $100 sell and it impacts the chart, and you're like, oh god.
Yeah, I don't. That's not very liquid, especially for options. There are some stocks I really like, but they don't. There's nothing notable in the options. And if I want to take if I want to take my normal size positions, or maybe I really like it, I want to take a larger position. For some stocks where I just can't do that because there's no liquidity. I've got to have someone to buy the contracts for me after they make money, And in my earlier days, I remember trying to trade options on penny stocks and be like, wow, I'm up 500%. And then there's literally no buyers. And it just sits there at a ridiculous percent return, but there's no one to buy it. So it doesn't matter, So you don't want to run into that because that feels an extra a special kind of bad. Warning things that people say that give me red flags, though. I think I about covered. I don't like anyone telling you one way. This way works. Nothing else works. You got to follow to me. I also, because that feels very sale. I used to work in sales, so I got like a big sales radar where I'm like, okay, I think you're selling this too hard. I hate it, which also makes it, I also understand because when I make salesy content, it makes me feel icky, but how else am I going to get the message out? So I don't know. Maybe I shouldn't have said that at all because I kind of understand it. But
sure.
Yeah, I don't think I have anything else that really is coming to mind. There was one other part
it was just green flags. Was there any green flags / things people should immediately go to YouTube and type in if they were like, I need to learn more, I want to get started? Are there any videos that come to mind? I know you've got one. So if you can either get me that link, I can post it. Otherwise, if there's any videos or like certain strategies that you think this would be good for someone to poke into or something like that.
I have a full option trading course, and like from the step of this is my brokerage app. This is how to navigate the UI of it. This is what buttons you click. I have that level of course on YouTube.
Okay. How do you find that? Is it just type in your name?
Yeah. If you
Noble Trading.
Noble Trading, and then you go to the playlist, and then there should be like course or class. I think it's like NBT course in my playlist. You can find that.
Here, I'll pull it up. Okay. Here we are.
Yeah, go to playlists. And yeah, NBT trading course right there.
First one. That. Look at this. So for anyone who's interested and you like this stream, you like Josh, highly recommend you subscribe to his YouTube. Check out this whole course. Pretty much everything you need is this is sick, dude. And they're not like an hour and a half long each, which is very nice. A lot of times I see that with these little courses, beginning things. So I'm like, dude, no one's gonna watch this. This is awesome stuff, dude. 10 minutes, 7 minutes, 5 minutes. That's great stuff. And then also, if you guys haven't already and you haven't checked out Josh's Twitter, I can also pull that up. But here we go. This is Josh, Nobel Trading. Same thing on Twitter. Highly recommend you give him a follow. He's also keeping up to date with everything going on in the market. So I think it's a good idea to find traders who you think are smart and who have good things to share and aren't trying to just sell you 24/7, but they believe in education. I think that's only W's to add to your timeline.
I mean, if we continue to grow at such a small pace, I think I'm probably okay. This is where I won't be humble. Okay, so brace yourselves. Okay,
all right, everyone.
I might get a little obnoxious. All right, I might get a little obnoxious. I'm probably the most underrated trader on X, just off my performance year over year, and probably at someday, if that continues, I'll just start posting big numbers and flashy things just out of frustration. But I got employees now. I got people to pay. But for now, I want to operate in a more ethical, I think, and responsible manner for the betterment of for both both for my branding and I'm just so concerned about my branding, man. I just feel like in the long term, if I don't do that stuff,
it's always better to build slow.
Yeah, and I feel like so. Although sometimes I do get frustrated because I'm like, I feel like what we're doing is really cool and really big and really special, and we don't have the numbers to prove it. But hopefully, someone watched this, they feel that way. They feel like, okay, what he's doing is good.
One thing that Canto Labs, I don't know if you know Ash Robin. He's mainly a crypto trader. Ash Robin is one of the most successful. I don't know. He's a great trader, but he's excellent at getting the message that he's a great trader without telling you he's a great trader. He just posts wins. He's got a couple graphics that he uses that illustrate the wins very, very professionally. And you're like, that's a nice graphic. I want to engage. I think that's huge because I've seen you've done some posting. You've done some little market updates. Like here's some stocks to pick and watch from. I think those are great. Like those are great things to start and build foundations from. I think the more you do some of those, the more you're like, hey, this Discord member and this sort of like 7 of us got into this trade in my Discord. We all made around, we made a cumulative $106,000 profit from this trade because of this. And you can quote tweet. Like there are things like that. So if you ever need or if you ever want to talk about the social media side, there's tons of ideas. It just requires like execution on someone to post it and get those clips up and get those graphics up. But if you have a couple of those, like there really is insane exponential. And I think hosting spaces and streams like you're doing and posting more on X, just all those things help.
So we are building. I don't have an ETA on when it will be done. That's the problem with hiring a developer. I don't.
You never know.
I just tell them to do something. I just tell them to do something, and I don't understand it. Well, I know a little bit of coding, but the reason I hired him is to do stuff I don't know. Yep. But we are automating the process of he created an application that tracks my account, so all my trades are shared within a few milliseconds of when I take them into the Discord. So I don't have to type it out, and you don't have that friction of me typing it out, that lag time. It's instantly shared, and then it's also both when I open and close, and then that's also automatically logged, and then we're creating like a performance tracker for that, so that it automatically logs it into like a Google Sheets, so that I can then share that. Like this is how the week went. That's what I want to do. I want to do like these weekly, but I want to automate all of it because even though I talked about the importance of logging everything for new traders, I just use Discord now. Everything's in Discord. So I just look at Discord and I'm like, how did this
go to his Discord, people? Go to his Discord.
Yeah. So that's now my log. That's my diary. That's my everything now, just because it's just, I'm not typing it out twice. So, I mean, that's because that's what
Josh has entered dad mode for real.
I literally
he's entered dad mode.
Yeah. So I'm getting kind of lazy about stuff, I've been doing it a while, so it happens. But yeah, we're automating it. So yeah, we'll have some of that stuff, and hopefully that does had the effect that you're talking about. I think it will. I think it will be really important because I don't know. I don't know if I'm dragging this too long or if you have another call, but I hate going. I know it would probably be good, but I hate going through like my old videos and being like, okay, where did I, or even remembering what video I said that thing that came true. I know I said it, but I don't remember what video I said it, or if it was on like.
I write it down. So I work with an editor, but I trust him to pick the right clips. But I know the right clips in real time. So if I can remember and you say something or I say something, I jot it. That's like, there's a few times in the podcast you were on the charts most of the time, but there's a few times where I'm typing and it's because I'm writing like 44-minute, Josh says this. And I'm just making a quick note. Like that's one thing I do to get help. But like having a podcast editor who is like a specializes in podcast sound bites and stream sound bites and stuff, they're out there. And depending on how big your network is, you might be able to find someone for a really good rate as well. And so I think that's probably the solution for that kind of thing. Otherwise, you're right. I also hate going through it. It just takes forever, and then you got to put captions in, so
it does. Well, and just to also be like, look how many times I was right. I was right here and here and here and here.
Yeah,
I don't know. Anyways, that's just the social media stuff. No one really cares except us.
There's so many traders out there who are excellent traders who don't have massive accounts. And so I'll say this this is like independent of the conversation. There are a ton of traders out there with 300 followers, 1,000 followers, 2,000 followers, 3,000, 6,000. And then there are influencers with 275,000 who post the same charts, but they actually don't know how to trade. They're just riding momentum and they're getting part of KOL deals. And so their job is to pump things up and for the chart to be higher than it was yesterday. And so it's just you got to keep that in mind. That there are traders who are very much worth their salt who have not had 250,000 followers.
Yeah, you know what? Right there, red flag. Someone's got a huge following and they're like perma bearish. Bear porn sells, fear sells, and these people who. Some of the bears are really convincing, and they're so good. They sound so smart, and you know what? They might be smart, but the bulls have all the money right now. So So what do you want? Do you want to sound smart, or do you actually want to make money? Okay, so look at that track record. Scroll through someone's Twitter. Okay, has the market gone up for 10 years and they've been telling you there's a catastrophic caps collapse coming and everything's gonna end? It's just like, what are we doing here? Okay, are we playing like Dungeons and Dragons and coming up with like fantasy ideas, or just doing improv, or are we trying to make money? If we're trying to make money, follow what the market's doing. Market tells you what's going on. Okay. You don't think you're Mr. Genius, smarter than everyone else, and then just lose all the money. Which keep that in mind. That's a massive red flag. And I will say the smartest people I know have the smallest followings. There are some because the smartest people who are also good traders, because a lot of them are brainiacs that are just not good at communication, honestly. But they are so wicked smart. So
it's 5-10 years I spent learning to trade. You got to spend 3 to 5-10 years to learn how to do social media. So if you want to be just as good, you can get lucky. Some people just get it. I don't know how, but I'm sure there are traders who also just get it. First time they look at the chart, they just pick things out, and you're like, okay, I guess you're a gigabrain or something. But I still think experience pays the most.
Right. I mean, I have not hired for someone for social media because I kind of enjoy it, and I might give up on that and just at least hire some help.
I would get some help.
Yeah.
I'll get some help a little bit.
Yeah. I like editing stuff though. So
no, it's not that you don't know. It's that it's just added on. Like do all the things you were doing plus bring someone on.
Yeah.
Have an extra 30% of content but don't change anything. I just think doing more is the answer. I did that with the Gary Vee method for 3 years. Eventually, I found myself at Wolf, which I did not expect to be working with the company. I thought I would just do my own thing, be my own island. And then there were certain things where I'm like, man, it'd be good if I could find like really top level people over here. But I'm not going to be able to afford them. Like, how would that even be possible? And then it was like, hey, do you want to join a team? And I was like, oh, actually, that'd be cool too. Actually, I'm open to that. But it was built off all that experience and output, and to get the name out there, to even get your name into the hat for something like that. But dude, I mean, I think it's going to be a great year. I think if anything, it's just more of a when game and rather than an if game, with getting the word out there for you. I mean, this market's going to be crazy this year, I imagine. It could go totally wrong, but either way, I think it will be an exhilarating year or two. And so because of that, especially when the market flips bearish and people are okay, now what do I do? And you're out here saying, hey, don't leave because we're going to do the exact same thing. We're just going to keep doing the thing. And like, you don't actually need to leave because all the influencers left.
Right.
And that's where I'm really excited because we're going to take, I think anyone who's sticking around and want to really make an effort, I think we'll be running the game. Just feels like.
I feel like that all the time. I've seen lots of tourists come and go, but we're residents, this is where we live. This is what we're doing. I've always believed it's when a win, not an if, because also because I've never made any real money off of the Discord or off the courses. The Discord for the first 3 years I did this was completely free. It wasn't until I was like, wow, okay, I want to do something bigger. I want to have courses. I want to start making like my own automated indicators and stuff. I need a developer to do that. I got to pay him. Let's start making money off this stuff to kind of pay for that so I can grow more, So, even then it's not, I don't need that, so I can, if needed, I can fund this, indefinitely just with my trading. And I will do so because this is what gives my life meaning. It feels fulfilling. So anyways,
that's awesome.
We've gone for a while.
Awesome. I was going to say, my bad. I kind of
you're good. You're
pushing
good.
it.
I feel like it's my fault.
I don't mind it because I didn't have anything. I have another stream. We're going to start in like 10 minutes, but just real quick, since we're friends, plus we're space friends. Shout out to you for coming on. I really appreciate it because you have been doing this for a long time. You do this stuff in a paid setting. So I appreciate you just coming on and just sharing a lot of the alpha and some of the insights because for people watching, he's not just some dude who rolled up and has done a couple trades. He's been in the game actively for a very long time. And for some reason, I just feel like with Wolf, we have a similar mindset with education. It's important to make sure the right people get put on, if that makes sense. There are a lot of people with huge accounts they just stumbled on. And like you're saying, there's a lot of your tickets everywhere in the market. Same thing goes for social. And I'm like, dude, there are some people who know what they're talking about and they just don't have 250,000 followers. And it's just a when question. So I'm glad we got to kind of, drop some trading advice and some TA and stuff like that.
Yeah. I appreciate that, Kate. Yeah. I just appreciate that a lot. Yeah. We are, it's been a good friendship over the years, actually. Yeah. You're one of the few friends I've actually made over social media.
I know, right? At some point we'll do the IRL collab. I don't know when, because we do a lot of crypto conferences. So like you might have to. I know,
and that's on me. Yeah. I'm a pretty big homebody unless I'm traveling with family.
I'm not going to lie. So am I. So I get it.
When the kid's a little older, I'll come to I'll do more stuff. For sure. I need to. Go to some. I've never been to a Bitcoin conference and stuff, and every year I'm like, what am I doing sitting here?
All right, everyone, we're gonna spam him. The next conference is ETH Denver. I think it's ETH Denver in March. We're gonna spam this guy. It's not gonna happen, but we're gonna spam him regardless. We're gonna make it. We're gonna make it happen.
Yeah.
But man. Last thing. Do you want to shout out anything? Plug anything before we wrap?
No, I mean, we covered it. Nobeltrading.com. You can kind of get like a snapshot. That's our online billboard of kind of everything that I do on the YouTube. The showcase video will also give you kind of walkthrough of what we do, everything that's offered, all the services. So if you're curious, check that out. Lot to learn.
Website.
Yep. Pretty clean website, right? I did it myself.
Yeah. Okay. Whoa, look at that branding. Oh my. Dude, this is sick. Yeah. Look at this.
Thanks, man.
All right. Okay.
Only took 4 tries for me to get something I was happy with.
This is really nice, dude. I am ashamed to say it's my first time on the site. I've been in all the other places, but not the site specifically. This is sick.
Thanks, man.
Very nice. Okay, well, yeah. Anyone who's interested in getting started with options or pretty much anything in the trading world, highly recommend Josh. He's been in the game for a very long time, doing it for free for a very long time as well. So check out his Twitter. If you're on YouTube, go to the description, click his Twitter. If you're on Twitter, click his @ right there and get involved. And we have spaces and streams every single day here at Wolf. We're going to jump into the next one here in just a few minutes, talking about crypto, NFTs, just market analysis with Bread and Alejandro. So stick around and just refresh the screen pretty much. But Josh, dude, thank you so much for coming on. I hope some people over the next couple of years, hopefully we see some crossover. People are making money and everyone's like Noble Trading, Wolf, trading, shorting, we're buying puts and sells, and we're all getting rich together. So
Absolutely.
yeah, man, thanks for coming.
Yeah, absolutely, man. Love you, man. I hope to continue to watch your success, dude.
Absolutely.
I love every moment of it.
Let's get it. Have an amazing day, everyone. Take care. We'll see you later in 3,